Good morning, good morning, good morning. It's Monday, the 7th of October. Where is the year going? Here's Mr. Brown. Can't be a bit of AC/DC in the morning.
Good morning, Ryan. Good morning, everyone.
Good morning, good morning, good morning, good
Hello,
morning.
what's this?
What?
Investing, US national news, world news. Where's that come? Did you do that?
I did do that. I found out you can select like what's trending and shit like that, so I thought I'd give it a go.
Two Muppets talking about markets didn't work, actually.
Well, yeah, very much so. It's like Stadler and Waldorf. The young people probably have no idea what I'm talking about. Right, just quickly, the legals. Nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or its affiliates, including the hosts, which is Mr. Michael Brown and myself, Mr. Ryan Paisley. And you know what? It's been a while, so I'm going to say it again. If you ever listen to anyone's Spaces events or podcasts or YouTube things or any bollocks like that, and you think that it's a good idea to just trade blindly on what you've heard, what should you do if you do that, Michael? What should you do with your head if that happens, if that goes through your mind?
Well, you should go and give it a wobble, couldn't you?
That's exactly what you should do. There it is. There it is. Morecambe Wise. There we go. Right. What's happened, my friend? All good?
Yeah, very good. How are you?
I'm all right, mate. It's been a busy weekend, actually, to be honest. People might have noticed we've now got a new kind of little layout for the posts and the tweets we've done, which took me a gazillion
5
years.
minutes?
No, it took me about a gazillion. It took me about a gazillion years on fucking ChatGPT to kind of come up with a very almost a bulletproof prompt that the social media guys can rely on. So I'm quite proud of that. It's all kicking off, mate. It's all kicking off. But anyway, we digress.
Very exciting nonetheless. Indeed, we do digress. Let's crack on. I suppose people are here to listen to us talk about markets at the end of the day. So let's have
more for them.
Indeed. In any case, let's have a quick look back at Friday, because there was a very positive end to the week for the equity market, the S&P 500 and the Nasdaq rallying by around about 1% apiece. And of course, this came after a much better than expected September US labour market report. Headline non-farm payrolls last month rising by 254,000, well above the 150,000 consensus, and also topping the forecast range, which expired, I suppose, at 220,000. Ryan's favourite metric, the revisions, they were also positive, with the August and July prints revised higher by a net 72,000. Other areas of the report were also incredibly solid, with average hourly earnings rising by 0.4% on a monthly basis and by 4% on an annual basis. The 0.4% monthly rise, of course, unchanged from the pace in August, while the annual rise was just 2 ticks quicker than the 3.8% pace that we saw in August. Meanwhile, in the household survey, measures of labour market slack also pointed to a continued resilient employment situation in the United States. Unemployment, that fell for the second straight month to 4.1%. There were some people out there quoting the unemployment rate on Friday to 3 decimal places. Ironically enough, these are the same people who are complaining that the BLS keep revising their data and say that it's not accurate enough. Those in glass houses and all the rest of it. Anyway, underemployment, that also fell to 7.7 from a prior 7.9%. For those who are unfamiliar, by the way, underemployment is quite a useful gauge. It is people who are not working as much as they would want to be working. So, for example, people who are in part-time employment but are instead seeking a full-time job. So it's a slightly more comprehensive gauge of how much slack is in the labour market. And of course, both of those metrics falling despite labour force participation remaining unchanged at 62.7%. So whatever way you cut it, the jobs report was pretty solid on Friday. Does beg the question why the Fed delivered that 50 basis point cut in September, but I guess that is done and dusted by now. And in any case, it does reinforce the idea that the Fed are likely to go back to a more regular cadence of 25 basis point
Cadence, what a
cuts.
word! What a word!
Indeed.
Oh,
From the November meeting onwards, although I would, of course, caution that we do have the October jobs report due on the 1st of November. And as Ryan and I were talking about last week, that jobs report could be a little bit soft. There are some downside risks. Obviously, the dock workers' strike is over, but the impact of Hurricane Helene and also, I think, is it Hurricane Milton that's now on its way into Florida?
Its way, into Tampa Bay, unfortunately. I say unfortunately
Indeed.
because
So,
it's unfortunate for anyone wherever it lands. But I have a very dear friend of mine that is already flooded, and he's scheduled for another 10 foot of water coming his way. Sorry,
well, we hope that he is okay, and everyone else, of course. But from a purely macro standpoint, there are some downside risks that could emerge for the October jobs report. As we saw in July, actually, in that report, when unemployment rose, that was pretty much because of Hurricane Beryl at the time. So obviously, just bear that one in mind. Oh, God knows, to be honest. We'll probably end up with Hurricane Clive or Keith or something later on in the year. In any case, back to the markets on Friday. We did see some selling across the Treasury curve, with the 2-year yield rising as much as 25 basis points to 3.95%, while the 10-year yield rose by 13 basis points to 3.97%. That selling pressure, particularly at the front end, has continued in early trade this morning, with the curve continuing to bear flatten. And in fact, when I got to my desk this morning, the 2s10s was at just 0.8 basis points. So that positively sloping yield curve looks like it could have disappeared already. In terms of how the market views the next FOMC meeting, incidentally, the OIS curve now pricing an 87% chance of a 25 basis point cut and a 13% chance of no change. Of course, that compares to, I think on Friday it was about 75-25 in favour of a 25 basis point move, and the 25%, of course, was for a larger 50 basis point cut. And looking slightly further ahead, the curve now pricing just 48 basis points of easing by the end of the year. Ahead of the payrolls print on Friday, that was around 60 basis points. That hawkish repricing has been a bit of a fillip for the dollar, the greenback gaining broadly against most G10s after the payrolls print on Friday, with the dollar index trading to a high of 102.70, which is its best level since late August, north of its 50-day moving average, and also notching a 5th straight day of gains. Most other G10s trading softer, the yen and the Kiwi dollar leading losses on Friday, both down by around about 1% apiece. In terms of commodities, gold trading water once more for the 4th day in a row at $26.50 an ounce.
Starting to feel a little bit heavier. It's starting to feel a little bit heavier.
I was just going to say, as you rightly alluded to last week, things are starting to look a little bit shaky for the yellow metal. It's one of those where if gold can't catch a bid when geopolitical risk is as high as it is, then when is it going to? And speaking of geopolitical risk, front WTI rallied another percent on Friday, briefly trading north of $75 a barrel to its highest level since the 30th of August. Obviously, the market remaining incredibly nervous around a potential Israeli response to the Iranian missile barrage that was launched last Tuesday. That has not yet come, although, of course, we remain incredibly attentive to headlines surrounding that issue, and, of course, sensitive to the fact that today is sadly the first anniversary of when all of this kicked off on the 7th of October last year. In terms of a few other bits and bobs from Friday, we heard from the BOE chief economist Hugh Pill. Pill was nowhere near as dovish as Andrew Bailey was on Thursday. Hugh Pill saying, really just towing the previous line from the MPC, that he supports a gradual withdrawal of restriction, which was somewhat interesting given that he hasn't actually voted for a rate cut yet. He was also saying that the MPC must guard against the risk of cutting too far or too fast. You'll recall, of course, that on Thursday, Bank of England Governor Bailey was saying that they could become a little bit more activist in terms of cutting rates if incoming inflation data continues to be promising. And a few headlines out of the EU on Friday. Firstly, and I think you may have mentioned this on Friday's Morning Blast, Ryan, the EU did vote to impose tariffs of up to 45% on Chinese-made electric vehicles. What was perhaps most interesting about that, though, was one of the countries that voted no was Germany, which, given the state of their auto industry, is perhaps a little bit perplexing, but never mind.
No. So just to be clarified, so they basically they. I think you got this. I think you might have got this wrong, Mr. Brown. So they voted
Oh, go
against the
on.
tariffs. They voted against the tariffs because obviously they've got so much at stake if China decides to kind of ratchet up their end of the trade war bargaining. So they've got probably more at risk than anyone else in terms of China kind
Oh,
of
I see. They're
whack
looking at
tariffs
it
on
from
them.
that angle, are they? Right.
Yes, and
Um,
also as who was it? I think John Ferro actually mentioned our dear friend John Ferro. He mentioned a very good point that basically Germany could be kind of setting the foundations for a load of state slash EU support for their sorry, I'll start again, for their auto industry
I'm
by
sure he
by
said
what
it better than this.
yeah, exactly that. But in terms of, make out that, this is really, really bad. They didn't want it in the first place. Oh, can you also throw us a bailout because we didn't, we weren't keen on it in the first place. So there could be a bit of 4D chess at play, but you can really, I can understand why Germany did vote against it. I was expecting them to abstain because then there's kind of the best of both worlds, but they've kind of really set out and said, hang on, we don't want these tariffs. And again, it's just currying favour with the Chinese, I think.
No, that's fair enough. Although it is worth noting that there hasn't actually been any retaliation from China yet, although that could, of course, be
Oh
on the
no, but
cards.
they have been on holiday though. To be fair, they're off last
Well,
week.
yeah, true. They're back. They were
Yeah,
back today.
toes
The
in the
other
sand.
God, the other thing to bear in mind from Friday was sticking with the EU. We had some bank regulation news, which is always fun. Germany, France, and Italy all writing to the European Commission, basically asking them to stop implementing more and more regulation on Eurozone banks and actually asking for some bank regulation to be eased in order to ensure a level playing field between EU banks and their competitors overseas. Finally, someone in Europe has woken up to the fact that just regulating the hell out of every industry is probably not great for competitiveness. We will see whether or not this letter falls on deaf ears. I would imagine it will, but nonetheless, it is just an interesting one, particularly given, firstly, that it came from the three largest economies within the Eurozone, and secondly, given the ongoing talks and merger possibility between UniCredit and Commerzbank, which would be one of the most significant bits of European banking M&A in a hell of a long time, it is just interesting to see some governments wading in on that issue as well. But that is pretty much it from me this morning.
Well, thank you for that. Before I go on do our kind of geopolitical headlines and summaries from News Corp, a big shout out because I'm feeling really guilty. So a big shout out to Suzanne from Zishi. They're listening in. Hi, Suzanne. I owe her a phone call. So just a quick heads up: Zishi do very, very, very good educational courses, but we're talking like top tier kind of C-suite stuff, kind of in asset management and all that stuff. They got ties in with University of Bath and the ICE Exchange, to name but a few. So if you're looking to do something on a serious basis, professional basis, check them out. I did post up into the Jumbotron one of their courses, so you can check out their website. But they are mustard, which is a good thing, unless you weren't aware of that. But anyway, I digress. And you can tell how guilty I am, Suzanne. I'm so sorry. I'll give you a call in a minute. Yeah, geopolitical headlines via our friends at News Corp. Firstly, just a quick one: Goldman Sachs sees Brent to trade in the 70 to 85 barrel range and forecast an average price of $77 per barrel in Q4 of this year, and a year average of $76 a barrel for 2025. Now, just a heads up on this, because this probably will be today's Ryan's rants. When you
Oh
see a
no.
target for 2025 of $76 per se, right? Unless it says, December 2025 or year end 2025, they're not saying that's where it's going to finish the year. It's nearly always, it means that's the kind of like the average price. So it's not saying it's going to trade. They're not saying it won't go to 80, and they're saying it won't, and they're not saying it won't go to 60, but they're saying over the course of the year, it will probably average around that price. So just something to bear in mind. Goldman Sachs also added that assuming a 2 million barrel per day, 6 month I can't talk today, disruption to Iranian supply, it estimates that Brent could temporarily rise to a peak of $90 a barrel if OPEC rapidly offsets the shortfall. The National Hurricane Center has said that Tropical Storm Milton is about 845 miles west southwest of Tampa, Florida, and the risk of life-threatening impacts is increasing for portions of Florida's west coast. Now, as I mentioned before, I know firsthand from my friend Alex that's over there that they were at like a foot of water before on Helene. This is more a case of the storm surge that's going to cause the damage than the wind. That's the current estimate. Unfortunately, the storm surge, as it funnels into into Tampa Bay, the water levels rise exponentially, and at the back end of Tampa Bay, they reckon that like the furthest from the ocean, they reckon they could be seeing 10 to 15 feet of flooding. So that's pretty massive. And again, as we've seen, unfortunately, with Helene, it's not the wind that's the primary problem. The wind comes and goes. It's the after effects from the added rainfall and the flooding that seems to be causing severe problems. So yeah, one to keep an eye on. Just on that, BP have said that it's monitoring Milton to protect its people and operations in the deepwater Gulf of Mexico, but does not expect any major impacts to its offshore facilities. Just moving afield over to Asia, Chinese officials will brief on the economic policy implementations with the state planner to conduct a news conference on Tuesday, 10 a.m. local time, which will be 3 o'clock tomorrow morning or this morning coming up overnight in London time, or in New York about 10 o'clock tonight. So obviously this is they've come back from a week holiday. I think they're just kind of trying to put everything together from all these measures that we've had previously over the last week or so. But just on that, something that came out from the Wall Street Journal. Oh God, you're all right.
Yeah, I'm just
Just some,
dying. That's all.
okay, that's right. Just something that came out from the Wall Street Journal over the weekend or overnight. Their chief China correspondent said that a source in Beijing told them that there are lots of misunderstandings in the market about what China will do next to support growth. And apparently, the quote is, yes, some fiscal measures are in the pipeline, but nothing as big as some had speculated. So that could be a concern for the week length that's jumped into Chinese stocks. And I'm assuming we'll get more color on this at the press conference, the briefing that's happening overnight tonight. So one to keep an eye on. I think I'm glad that me and you have stayed well out of the way of that. Finally, obviously, not finally, sorry, but got moved to the Middle East. Israel continued its wave of airstrikes on Lebanon over the weekend with some of the heaviest bombardment we've seen since the start of the campaign. Israeli military spokesperson, said their response to Iran's missile attack will come at the timing that Israel decides is best. And it feels like another day, another Hamas leader has been killed. I think we're now on like the fourth one. So if you're looking at their management hierarchy, you got to be bricking it if you're moving slowly to the top. So good luck to you.
I was going to say, if you're a sort of Hamas intern at the moment,
Oh
you're
God,
just
yeah.
fucked, aren't
You gone from coffee to like number one target in the space of about 2 days. Fucking hell. Make me a cup of tea. Oh, hang on. Anyway, we digress. So just finally, not finally again. Netherlands Defence Minister has pledged 400 million euros for drone action plan with Ukraine. I believe I also read, or PIQ might have even posted about Netherlands sending some more F-16s over there as well. And finally, UK PM Starmer's chief of staff, Sue Gray,
you?
resigned over the weekend. Basically citing concerns about the increasing news reports regarding her salary, her role, and pretty much everything else that she's been doing. So, yeah, ding
Yeah,
dong, the witch is
something
dead.
tells me she that wasn't her choice. Like
No,
when a
but
football manager leaves by mutual consent.
yeah, but the best, well, not best thing, the shocking thing is that she's moved to a job that sounds made up,
Oh
and she's
yeah,
still on like 170 grand a year.
is
Do you know
she
what?
is she
That's
still on that?
she's still on. So yes, it's 100 plus. I don't think she's taken a pay cut from what I read, and also it's Labour, so she's probably getting double that in expenses. Oh,
Yeah, probably,
anyway,
probably.
before I go off on one, all right, that's two Ryan rants today. I can do right. What's happening today, my friend?
Indeed, what is happening today? It's a very quiet day,
I don't know. You
actually, to
tell
be
me.
completely
That's
honest
why
with
you're
you.
here.
There is not particularly much on the economic docket today. We've got some retail sales data out of the Eurozone this morning for August. Sales expected to have risen by 0.2% on the month from a prior 0.1, but I certainly don't think that's going to be market moving. We do have 4 FOMC speakers and 4 ECB speakers on the docket. But again, I'm not entirely sure that either of those are going to move the markets particularly much. In terms of the rest of the week, it is actually a relatively quiet economic docket, at least compared to the busyness of last week. Just looking very briefly day by day, Tuesday we get minutes from the September RBA meeting. Perhaps more importantly, China reopens after its Golden Week holiday, and another plethora of central bank speakers due as well. We also on Tuesday get the first of this week's supply out of the United States, which is a 3-year auction. That's followed by a 10-year note auction on Wednesday and a 30-year bond auction on Thursday. Into Wednesday, we have a policy decision due from New Zealand. The RBNZ, they're expected to cut rates by 50 basis points to 4.75%. The market pricing around a 3 in 4 chance of such a cut, while also pricing 94 basis points of easing in total by the end of the year. Worth noting, the RBNZ only have a meeting on Wednesday and then one in November, and then that is them done for 2024. Also on Wednesday, we get minutes from the September FOMC meeting, where, of course, the FOMC delivered that jumbo 50 basis point rate cut. In terms of the rest of the week, moving into Thursday, we have probably the standout event risk of the week, which is the September US CPI report. Headline CPI, that's expected at 2.3%, down from a prior 2.5%, while core inflation, that's expected to hold steady at 3.2%. Of course, CPI is still of interest and it will be closely watched, but in terms of its market and its policy impact, that is substantially reduced compared to where we were a few months ago, given the Fed's now focusing on the labour market as the primary determinant of monetary policy. Speaking of which, we get the weekly US jobless claims data on Thursday as well, though neither the initial nor the continuing claims print pertains to the October non-farm payrolls survey week. And moving into the back end of the week, Friday is probably the busiest day in terms of economic releases. We get monthly GDP out of the UK for August. The economy expected to have grown by 0.2% compared to the stagnation that we saw in July. We also have PPI from the United States. Producer prices expected to rise by 1.6%, a modest slowing from the prior 1.7%. We have the September jobs report out of Canada, where unemployment, that's seen continuing to tick higher to 6.7% for a prior 6.6%. And also Q3 earnings season gets underway on Friday as well. We hear from JP Morgan and Wells Fargo, who report before the market open as the week draws to a close. And that really kicks off reporting season for the next 3 or 4 weeks as well. So that's pretty much your lot for today then, in that case.
Awesome. Well, thank you very much for that, as always, Mr. Brown. Just a bit of housekeeping. Some of you that might have noticed that we are doing a slightly different tweaking to the layout of our tweets. We're trying to put some tickers of interest and stuff like that. Please let us know what you think. Obviously, we're trying to make this as good for you as it and simple as possible for us.
I am a fan on that one.
Yeah. Well, look, bear with me on it because it was a weekend of me prompting on ChatGPT to get all this sorted so I could hand over to the social guys. So it will go spectacularly wrong at some point. I'm expecting like ticker symbols like tits and ass or something to pop up at one point. So yeah, bear with me, but I think we're getting there. It looks like it's quite helpful for people. The feedback's been good, so that's awesome. Just a shout out as well, we've got some quite major updates coming this week. We've got the News Squawk Audio Squawk being added. Hopefully we've got a few other bits that are being added. So keep an eye on that. Officially the promo code for a year's free access to higher Q. Officially that's not being promoted anymore, but if someone did type in blast in uppercase into the promo code bit in the checkout, it's still working, so keep that to yourself. To do that, also just a bit one from me, if anyone listening to this lives in Malta or has been to Malta or has lived in Malta, shout me up because I'm seriously considering moving over there. And on that bombshell, Michael, I'll speak to you later on.
Well, I was
Go
just saying
on.
I've got a bottle of champagne on my desk, so I might just
Oh,
put that in the
you
fridge
absolute
pending
bastard.
your. Do you know what?
Oh,
Actually,
like
do you
that,
know
is
what
it?
that bottle of champagne has been there for about 6 months, and I was
You
saving it.
absolute prick.
I was saving it for something at the end of August that then didn't happen, so I need another excuse to drink it now.
So basically what you can infer from that, ladies and gents, is Michael didn't get laid in August. Right, on that bombshell, we'll see
No,
you
that's not what
tomorrow.
you can infer from that.
Right, Bye, everyone.
Goodbye. Oh, we got to do our awkward pause now.
Yeah, no, that's what I'm doing a bit of singing, mate.